What's up guys, welcome to door number 20 of the finance calendar, where we dive into 24 financial ratios in 24 days. Don't forget to subscribe so you don't miss any of the ratios, and let's go. Today we are going to talk about CCC, cash conversion cycle. It tells us how many days it takes for a company to turn its inventory investments into cash flow. It is calculated by adding up days inventory outstanding, days sales outstanding, and by subtracting days payable outstanding. You can calculate the days inventory outstanding by dividing the average inventory by the cost of goods sold and multiplying the result by 365. To get the average inventory, you have to add up the starting and ending inventory of the reporting period and divide the result by 2. You can find the inventory in the balance sheet. Intel's 2020 beginning inventory was $8.74 billion and the ending inventory was $8.43 billion, so the average inventory was $8.59 billion. The cost of goods sold is sometimes called as the cost of sales, and it can be found in the income statement. Intel's 2020 cost of sales was $34.26 billion. This means that the days inventory outstanding is 0.25 multiplied by 365, which equals 91.25 days. Days inventory outstanding is the number of days that it takes the company to turn its inventory into sales. The days sales outstanding can be calculated by dividing the average accounts receivable by the net credit sales and multiplying the result by 365, or by dividing the average accounts receivable by the average sales per day. Again, use the starting and ending values to calculate the average. Intel's 2020 average accounts receivable are $910 million, and it can be calculated from the balance sheet. For the average sales per day, I am going to divide the total sales by 365. The total sales can be found from the income statement. For Intel, the average sales per day are $230 million. This means that the days sales outstanding is 4.27 days. The days sales outstanding is the number of days that it takes the company to collect its receivables. Finally, we have to calculate the days payables outstanding. It is calculated by dividing the average accounts payable by the cost of goods sold per day. Again, you can calculate average by using the starting and ending values found on the balance sheet. For the cost of goods sold per day, you can use the value from the income statement and divide it by 365. Intel's average accounts payable of 2020 were $4.85 billion, and the cost of goods sold per day was $0.09 billion. This means that the days payable outstanding are 53.8 days. The days payable outstanding is the number of days that it takes the company to pay back its payables. Now we have all three values required for the cash conversion cycle. Intel's 2020 cash conversion cycle is 91.25 plus 4.27 minus 53.8, which equals to 41.7 days. So what does this tell us? First of all, it tells us that it takes Intel 41.7 days to turn the cash investments in inventory into cash flow. The ratio is used to know how efficiently the company is managing the capital. The shorter the cash conversion cycle is, the better, because it means that the company is able to sell its inventories more efficiently. Second, it tells us if the company's management is improving. You should compare company's CCC to the previous year's CCC to see if it has improved or become worse. And lastly, you can use the cash conversion cycle to compare different companies in a similar industry. However, remember to use all the information and ratios before making any investment decisions. That's it for today's financial ratio. Hit the like button if you found this video helpful and subscribe so you don't miss the future ratios. Have a great day and I'll see you tomorrow. Bye!